Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk this afternoon, we have Munshi Sun, reporter with Wall Street Journal, Una Choi, Global Head of Regulatory Operations at Nasdaq, as well as Tony Seo, Head of Regulatory Strategy and Innovation at Nasdaq. We're here to discuss social media and its impact on financial market abuse. It is great to have everyone with us this afternoon. And Una, we'll kick it off with you. Just how large is the impact and how is it changing the market landscape?
Sure, the financial markets are continuing to evolve at a very rapid pace. And we are definitely seeing an active retail participation with social media heavily influencing investment decisions, especially with respect to trading in smaller cap stocks that do not normally get the mainstream media attention. So it's been very active in this area and growing.
And Tony?
Yeah, you know what, I'll throw some stats out there just to kind of show the impact. Right, so the regulators have been looking at this fairly closely and have started to kind of measure the impact. So ASIC in Australia, they've measured, I think, about 38% of investors use social media as part of an investment decision. And interestingly, of that, YouTube was the most popular social media platform that investors are looking at. And then also, I looked this in SFC in Hong Kong. They kind of surveyed their investors and they found almost 1 in 2 investors were using social media as part of the investment decision, right? And that kind of goes into investment, but also it kind of goes into potential market abuse and manipulation as well. So the SFC also released that 20% of their open investigations involve social media enabled pump and dump style schemes, right? So it's definitely a prolific kind of issue and potential risk out there.
Yeah, well, it's interesting, Munshi, from your perspective as a reporter from one of the most well-known financial publications. We weren't reporting on this 3, 4, 5 years ago. It's a relatively new vertical. What can you tell us from your perspective in terms of how it's changing the market?
Yeah, for sure. Like Una talked about, we've seen the meme stock being driven up by social media, by the users on Reddit during. We're also seeing more institutional investors using social media, including the messages from LinkedIn as part of their day-to-day workflow. I think there's some recent survey and study shows that about 80% of institutional investors are using social media as their daily workflow, and about 30% are even including information as part of their decision making. So I think it's definitely making a change in the market out there for both retail and institutional investors.
Yeah, I mean, it's another vertical of research is really what it is. Yeah. Tony, we know the impact is significant. What types of risks are we seeing in the marketplace?
I think there's kind of like a few different factors, right? I think one factor is around finfluencers, right? The Dutch AFM, they did a study a few years back, and they kind of looked at about 100 finfluencers that are active in their marketplace, and they found that a lot of them kind of tended to promote kind of riskier products compared to other financial advisors, and then also they didn't take the same level of care, right? So I think influence is kind of one thing that people focus on, and another thing is kind of potential impact of social media on kind of financial integrity, right? So social media pump and dump schemes, I kind of mentioned a little bit earlier, is kind of an area where essentially the pump and dump scheme has been existing for a while, and social media really kind of turbocharges potential for those schemes.
Yeah, well, I mean, it's interesting. That's human nature, for lack of a better term. We might be talking about another pump and dump scheme in 10 to 15 years from now, right? There's always going to exist, whether it's social media or not. What are some of the risks that you're seeing in the marketplace? Because to Tony's point, when it comes to influencers, you have to worry about retail investors and education as well to be able to spot this.
Right, absolutely. I think there is a risk of just disbursement and just diversification of social media, both in terms of platforms and also the medium of communication itself. So, we're looking at the movement from the traditional social media platforms like X, Twitter, Reddit, and Facebook into Discord, TikTok, YouTube, and other platforms as well. And in terms of the communication medium itself, really shifting away from just written text into embedded audio and video that are much harder to track and monitor, especially from a regulatory perspective.
Yeah, and I'll really stress that. I think that proliferation is kind of key, and it's kind of quite surprising where it's moved to, and the move to kind of voice and kind of video is a big part of it. Like Discord, you mentioned, has been something that we've started to look at a lot more, right? And Discord started as essentially a kind of like a voice chat that people who were playing computer games would use, right? And now there's lots of quite huge Discord channels like discussing potential stock tips.
Yeah, and how they can move it. And we'll get to the regulators in just a moment, but Munchie, how are people addressing these risks, or are you speaking with people in terms of how they're leveraging social media, whether it's from the retail perspective or institutional perspective? Are there certain platforms that they go to, or are they using like Reddit in a different way?
Yeah, for sure. So I think we're definitely seeing the risk maybe most amplified during the SEC tweet hack last month in the crypto market when the SEC said that they sent out an incorrect tweet in early January about, they have approved the Bitcoin ETF, turned out to be it was a hack. But we've seen the price of Bitcoin just that second just drove up so much more before it came down, realizing it's actually not a real tweet from the SEC. So I think the risk is definitely there, and I think we've seen a lot of regulators like SEC, FINRA, even from the UK, talking about addressing the financial influencers, the risk in companies disclosing the use of influencers in promoting their products, as well as the information company, their executives and the company tweet about, on their Twitter, on social media, in terms of what kind of statements they're making. We definitely see a lot of enforcement action recently as well on that front.
Now, what have the regulators been saying? Isn't it up to the individual investor to be able to, and analyze some of these risks on their own?
Yeah, I mean, it's a whole ecosystem. I think everybody has a responsibility to make sure that they're doing their part, including the regulators, as well as the investors themselves. And, I think individual investors need to think about just going back to the basics of investment 101 and focusing on the fundamentals of the company, looking at the disclosure, thinking through the risk factors, and understanding the financial condition and outlook for that company instead of chasing the latest buzz. With respect to the regulators, of course, we need to be really proactive and vigilant in terms of monitoring social media. And now the social media monitoring is embedded within the fabric of surveillance. So both from looking at things from a real-time trading perspective as well as on a post-trade basis. And we focus on looking at the source, the intensity, and the sentiment of the social media, not only just with respect to an individual company, but also with respect to specific industries and market-wide as a whole. So it is part of our responsibility and obligation, but I think it's just a shared obligation and responsibility by everyone within the financial ecosystem.
Right. Tony, anything from a global perspective in terms of what regulators are doing to counteract this?
Yeah, I would say, and kind of Munchie kind of mentioned it, influencers is something that global regulators have been kind of focusing on if we're talking social media. ESMA just recently, actually just a few weeks ago, released some guidances on kind of like promotion through social media, right? And they kind of mentioned a few things. One, they were fairly clear that the kind of stock promotions on social media are still under the guidelines of the market abuse regulations, and they're kind of fairly clear on that. And the other thing is they kind of pointed out that market manipulation was a potential kind of risk factor around social media. I think like I would say an interesting thing here is that the kind of why there's a focus on influencers and what regulators are doing is that it's a very fast evolving space, right? So there's the investor education portion, but there's also the education of these kind of like influencers or kind of social media kind of people themselves, right? So, and I've seen, what I've noticed is a lot of regulators are taking that kind of two-pronged approach, educating investors, but also educating people who are posting these messages.
And I think it's also important for the regulators to talk and communicate and coordinate amongst themselves, because each regulator has a really unique vantage point. And to bring that all together to address a cross-market phenomenon in a cross-market comprehensive way, I think is going to be very, very important as we move forward.
Yeah, and that's a really good point. The FCA is consulting on social media promotions at the moment.
Yep.
And one of the challenges that they specifically mentioned was how do we kind of handle promotions from UK citizens, but on these kind of foreign potential platforms or foreign products, right? It is very much a kind of global, kind of cross-asset, cross-product problem.
And that's a challenge with social media more holistically, because a lot of these companies are domiciled in the US. Meanwhile, they have to adhere to local regulations in the EU. That's a panel for another time. But when we think about the future of this Munchie, we know how social works. It's amplified by AI. Hits beget hits, and a lot of teenagers, Gen Z, newer investors, and it's great to see newer investors come to the market and it's being democratized and there's access, but how they consume their information, educate themselves, largely it's through social media, whether it's TikTok, YouTube.
You're absolutely right, Jill. We've seen all the teenagers. The journal just recently did a story on how teenagers are learning so much about their investing finances. Mostly primarily still from their parents and friends, but still 48%, half of them are learning from TikTok, Instagram, Facebook, and even just by doing internet searches. I think that's definitely a good way, in a way, educating finances early for people, for the teenagers. But at the same time, there's a risk of, identifying which information is accurate, it's true for them to learn about it. And I think, FINRA did a study recently showing that actually I think Gen Zs are pretty good in terms of now trusting information from social media as as the best information, but still I think the risk is definitely over there in terms of trying to identify what kind of information to do more due diligence on, and or take information over from financial institutions or financial professionals. So.
Yeah, I mean it's largely an echo chamber, and whether we're talking about finance, we're talking about politics, if we're talking about clothes or different types of diet fads or so forth, it all functions the same way. So when we think about the future of what this looks like, how do you think the regulators could approach this? It just moves so fast.
Yeah, very fast. And I think the scale is going to be very different too. So what Gen AI is going to do is just increase the scale of the potential bad activities, make it more sophisticated, make it more accessible to people, and just broaden it in a way that we haven't seen before. So as regulators and as investors and individuals ourselves, I think it's really important for us to be trained and educated on the tools so that we can think through how to combat or prevent those bad, potentially fraudulent activities from occurring and address them in an effective way. And that's certainly something that we're thinking very, very hard about and being proactive on in terms of what kind of tools can we use in order to be able to enhance our speed and efficacy of our surveillance program.
Right, and Tony, you have a lot of experience on the surveillance side, but recall what happened with GME or AMC, right? When we were kind of at the height of the meme stock craze, everyone, when they started losing money, where are the regulators? What are they doing? It takes time. You have to backtest, you have to implement these policies and do the research.
Yeah, and I think that the challenge, and in terms of the future, the challenge is going to be twofold, right? I think one is a challenge of the kind of large amount of data, right, that needs to be kind of worked through. And then even the kind of the language of how these people talk on these social media, that needs to be kind of incorporated as well. That kind of is quite different, evolves over time. There's a kind of increased use of emojis and things like that as part of the language. And the other challenge is the kind of change of platforms, right? Yuna mentioned it kind of very well at the start, right? We spent time focusing and building tools which looked at Twitter, right, as it was called at the time. But then the meme stocks things happened on Reddit. We were looking at Reddit as well, so I'm really kind of glad we were ahead of the ball. But we are needing to kind of stay at the head of the ball and looking at what is the next platform, right, where potentially people might be looking at these social media activities, right? And I think that's kind of going to be one of the big challenges, kind of like, especially as we move away from text to kind of voice and video.
Yeah, well, it was interesting. We were talking about this off camera. When you get a thumbs up, does that mean your trade's confirmed, or I like the idea, or I'm just acknowledging the fact that you sent me this idea or this question? There are a lot of gray areas there. It's not as simple with compliance, let's call it back in the day, where, oops, you forgot something on the fax machine or the copier. Right. It's different now. So much of it is open into interpretation, which is subjective, of course.
Exactly, and then we shouldn't forget, a lot of, especially in crypto, a lot of the prices are driven by just posting an emoji like rocket, like to the moon,
right.
And so that kind of nuances and how emojis can mean very different things for different generations, which the journal wrote about, like a smiley face for a Gen Z compared to, an older generation mean completely different things. So all these nuances, I think regulators and as well as different companies, observer need to kind of keep that in mind and figure out a way to, check on that. So,
yeah. All right. And Una, last word here as we think about moving forward and our response.
Yeah, just staying vigilant and proactive and being educated. I think we're in a very dynamic world, and what we knew today is going to be very different even a month from now. So just really thinking through that and not being afraid of thinking creatively about the new tools and solutions, using the same kind of technology and AI and perhaps even the platform the fact that we're doing a live stream right now to educate investors and to educate the market about this kind of topic is an important way to get the word out. So just continuing to do that.
All right, we appreciate the insight. Thanks for joining us on
Thank
Trade
you.
Talks. And thanks for joining me from the MarketSite studio. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.